I'm going to introduce the next panel, which will discuss a key component of the response to the pandemic, which we alluded to in the previous panel, the role of fintech in the era of COVID-19. Of course, innovation is key here to helping us get through this, especially to the other side, to a post-pandemic world where hopefully we have a vaccine quite soon, and especially to help the poor, disadvantaged communities around the world and provide social justice and gender equality. Of course, there's an enormous amount of innovation happening in the world, so I'm pleased to introduce the moderator for the session, Matt Saal, who has a key vantage point over the pace and scope of fintech innovation in his role as head of the International Finance Corporation, IFC's digital financial services practice. Matt's responsible for both investment and advisory portfolio. Before this, Matt was an associate director at the European Bank for Reconstruction and Development. Matt, so over to you and your panel. You can go off mute.
Thank you, Leon, all the others who helped to get this panel and this day organized. So welcome to this session on the role that fintech has played during the pandemic. Today we've got a great panel of experts who will share their observations on how the pandemic and the response of innovative finance has impacted the financial ecosystem. So rather than have you listen to me provide any kind of further information on the panelists, I'm going to ask each of them to take 3 to 4 minutes to provide a brief self-introduction and tell us from their vantage points in industry and in regulation and academia, how they see the use and provision of financial services changing, what the key impacts of COVID have been, and how industry and regulators have responded or could respond better. So let's begin with Shailee Adinolfi, who's a director at Consensys.
Thanks, Matt, and thanks, Leon and Michael, for bringing us together. It's always nice to be back talking to old friends in the fintech community. So as Matthew Saal mentioned, I'm with Consensys. I work on business development in the blockchain space, mainly working with the Ethereum ecosystem. And I'm focused on recently on central bank digital currencies and applications of blockchain in real estate, asset management, and trade finance, supply chain as well. And so some of the areas that I see that have shifted because of COVID are with governments trying to reach citizens in a more efficient way using fintech, right? And so there's been much more dialogue amongst global governments on central bank digital currencies and how that might be a tool for them to reach citizens in future emergency situations. What would the regulatory aspects be? There are already starting proofs of concepts in many countries, and that's been really exciting to see. And recently you had some announcements by the Federal Reserve on their interest in evaluating central bank digital currencies. So I'm looking forward to the conversation with everyone here today.
Thanks, Shailee. And now let's turn to Sunayna Tuteja, who's the head of digital assets and DLT at TD Ameritrade.
Thank you so much, Matt. Delighted to be here, everyone, and props to our friends Leon and Michael for finding the art of the possible to bring the community together, regardless of whatever 2020 keeps throwing at us. As Matt mentioned, I'm currently the head of digital assets and DLT at TD Ameritrade. Prior to this, I built and led our global emerging tech and strategic partnerships practice. Over the last 10 years, I've really operated at the intersection of finance, technology, and policy with this, obsession of harnessing the power of technology to really, break down barriers and democratize financial services. So, kind of having had that front row seat, one of my observations has been, for incumbents and institutions, whether you're the public sector or private sector, often you kind of need a catalyst to overcome that inertia and kickstart, adoption or trying something new. We saw a little bit of that, during the GFC, global financial crisis. But I think COVID has proven to be a catalyst like none other. Partly, it's been a baptism by fire in terms of watching organizations, adapt. But I think it's also been fruitful, where I think it's helped a lot of organizations of all different sizes kind of overcome years of inertia and hopefully leapfrog. One of my quotes from all the earnings calls I get to listen to was Satya Nadella on a recent Microsoft call, where he said, even from their vantage point, they're seeing 2-3 years worth of digital transformation happen within weeks and months. So I think that's very positive, but I think that acceleration also comes with a little bit of growing pain, and happy to double click into some of those nuances as we go through the panel.
And one of those growing pains is finding the mute button or unmute button really quickly. Thanks, Sunayna. And Matthew Homer from New York's Department of Financial Services. You're the head of Research and Innovation Division. How has innovation contributed to the COVID response, and what new challenges are you seeing? And grab that mute.
Great. All right. Well, thank you for that reminder. That's not the worst mistake I made today, which is somehow all of Matthew Saal's emails were going to my junk folder, which is not a good idea to do. not a good way to prepare for a panel.
Never good to ignore your moderator.
Right. Exactly. But we got it fixed 10 minutes beforehand, so I think we're good to go. But no, it's really great to be here and be with such a good set of panelists, everyone who I know well and respect. So yeah, for people who aren't familiar, the New York Department of Financial Services is the state regulator for financial services in New York, and it really covers a broad set of financial services and activities, including banking, all sorts of non-bank financial activity, the insurance sector, including health insurance. And then new and emerging areas in fintech, of course, like crypto. And so, the crisis has really been something that we've been on red alert around for, since it started, and have taken action in many different areas. And I think that, unfortunately, as often happens in these moments, it's the most vulnerable who are impacted the most. And I think that's been a great concern of mine and DFS. And I think it's important to recognize it's not just COVID. We have the health crisis, but we've also had an economic crisis. And then we've also had, a very important reckoning around racial injustice. And I think those are three interrelated issues that are very important, for us to think about together. So, just very quickly, as an agency, we've really, done quite a bit, putting in place consumer protections very quickly to defer debt payments and things of that nature, enabling telehealth to grow, which I think has been a really interesting aspect of what we've seen over the last few months, where telehealth adoption used to be in many parts of the country less than a single percentage point, and now you're seeing double-digit usage of telehealth in many places. And I think in the fintech space specifically, we do think innovation can have an important role to play. And so we announced an effort called DFS Fast Forward, which is an invitation for innovators to come to us with ideas in three particular areas. So ideas in the health tech space to help with people's health and well-being in this moment of crisis, ideas for small businesses, which I think is just an incredibly important constituency to think of. And then ideas to help with household resiliency. So, our approach with regard to innovation has been to identify gaps or places where we think it's really needed, and to create opportunities and an easier glide path for innovators in those areas. And with that, I will pause and put myself on mute.
Thanks. And last for this round of quick intros, but certainly not least, Chris Brummer, professor and faculty director of the Georgetown University Institute of International Economic Law, and a recent member of the FINRA Adjudicatory Council. How do you see the pandemic catalyzing change, positive or negative, in financial services, securities markets, and the impact on customers?
Thank you to Matt Homer. It was very interesting because actually the permission to mute comes after you actually press mute. So, like I will share Matt Homer's logistical query. But thank you so very, very much. It's a pleasure to be really with everyone on this panel and this panel of experts. I'm not going to really repeat what they've said in large part because I agree with it. So I'll try to go a little bit further. And, just listening to the initial responses of the panelists, one can also surmise that the very concept of whatever fintech has gone through a number, sort of this fast forwarding of sort of this categorical kind of interpretation where it used to be a little bit hazier. It's still hazy, but that concept is being put to very specific use cases and applications in a way that's making it more concrete. And I think it's useful to think about what those use cases and applications are, because it's not only about solving solutions, but for people who are in the fintech community itself, that community's contours are starting to have slightly more concrete parameters. And so when you think about things like financial technology and fintech, we're understanding that it is a broad ecosystem that has been faced with this challenge of how exactly do you help to enable people enter into commercial transactions, often on digital rails, in a way that not only promotes efficiency and not only sort of pushes on this traditional question of sort of lowering costs, but really is reinterrogating questions of capital access and of banking, and as Matt had mentioned, of public health, in ways that really it kind of hadn't really involved. I mean, certainly, when you talked about fintech and even digital payments, the emphasis on contactless payments was not really given the same kind of emphasis that it was before, and it's really shaping not how we understand fintech, how people are investing in fintech. It's creating, as I'm sure we'll talk about soon, a real stress test for fintech, not only for the legacy banking system, but a series of stress tests to sort of see, well, which pockets of this ecosystem may prove to operate more robustly than others. And then lastly, I think that just as important as this evolution of the concept of fintech has been, this re-questioning that we'll see more and more and more on what is the concept of money. The central bank digital currency question isn't just a question of payment rails. It's a question of how people interact with one another and what does it mean to move to a digital form of payment and a digital form of money that can itself operate as a kind of a platform on top of which other kinds of applications can be built. And so it's really interesting as an academic. But it's also a test, a real world test about really how we think fintech and financial technology are going to be evolving because of this exogenous shock that we're calling COVID-19.
Thanks, Chris. And I want to come back to that question around payments and contactless and the new kinds of platforms. But first, I want to just bring Sunayna and Matt Homer back into dialogue here on something that was mentioned, this acceleration of change. And as a supervisor, how do you maintain the soundness and stability of the system as the entities you oversee are transforming so rapidly? I know this wasn't necessarily your department.
What's with the mute on mute? You have to.
I was unmuted. Am I unmuted? Are you hearing me? Somebody give me a thumbs up. Okay, sorry about that. So let me go back, Chris. Thanks very much, and I do want to go back to the payments issue and the new platforms that are being created for both individuals and businesses. But first, I wanted to just dive in a little bit to something that Sunayna had mentioned and get Matt Homer's perspective. This rapid change of financial institutions. As somebody in operations at a major financial institution, you've moved people off site. You need to maintain compliance. You need to. And as a supervisor, Matt, your organization's worried about maintaining the soundness and stability of the financial sector as a whole, as all of the entities you supervise are changing so rapidly that years of transformation compacted into a few weeks and months. Where's the tension? Take us inside a little bit. Some of the changes that you needed to make operationally, both from a financial institution perspective, Sunayna, and perhaps from an oversight perspective, Matt, just as people adjusted to this new reality.
Yeah, I mean, it seems like a long time ago, but it was only in March, April when all of our worlds in one way or another kind of got turned upside down. And for us, in the brokerage industry, I think it was around that mid-March timeline, as the states really started to put out their declarations about, closures, that we really had to start migrating our businesses to be fully digital first. So from a TD Ameritrade perspective, within a matter of, 10 days, we were able to move over 10,000 of our associates spread across the United States to be able to work from home. And this included, folks in not just in our head office functions, but, in our brokerage ops, in our call centers, in our branches. So, that had never been done. So, really partnering with regulators to kind of design and execute the playbook as we were building it was one of the critical components. But I think the other one was really, at the same time, taking care of our over 10 million retail clients and a community of 10,000 advisors to fundamentally change how business was done. You couldn't walk into a branch anymore. And, calling the call center was a different experience. And we forget this was all at a time when the markets were just gyrating and nobody knew if the Dow was dropping 1,000 points or going, we forget, the markets were in meltdown. Everybody was trying to make sense of, things at a time when there were more questions than answers. So, some of the learnings that we really garnered from that, one, I think, that pre-existing partnership with regulators and tech partners was critical, because you can't build those relationships at a time of need. Those foundations have to be in place. And I think the second thing that was really validating for somebody like me, who's again been, helping organizations really lean into fintech over the last few years, is this concept of evergreen innovation. And what I mean by that is, I've always maintained that one of the imperatives for innovation is actually less about technology, which sounds counterintuitive, but it's actually more about the shifting consumer behaviors, or this delta between something being a novelty to becoming a necessity. We heard from panels earlier about the power of mobile technology and the smartphones, and how around the world it's engaging consumers with financial services in completely new ways. Well, think about it. It wasn't that long ago, even 5 years ago, our smartphones were about playing Candy Crush. The notion of banking and trading on your mobile device was unfathomable. And today, all of those experiences are really mobile first. I remember being, in rooms where we had to make decisions about our tech budgets and saying, oh, how much do we want to invest in our web platforms versus our mobile platforms? And today that conversation just seems so antiquated. And I'm often reminded of the Hemingway quote, which I'm going to paraphrase, the notion of, slowly at first, but then all at once, right? And I think that concept has kind of been put on overdrive. And the lesson we've learned is, because we had been consistently making bets in cloud, in automation, in AI, in machine learning, we were able to successfully transition our associates and our clients at a very turbulent time with as much friction minimized as possible. Because if those foundational elements and that evergreen innovation wasn't in place, it would have been very hard to kind of build something up at a moment of crisis. So I think for me as an innovator, it's really kind of validated that notion that innovation must be an evergreen journey, and the application and investment in new technologies in fintech must be an ongoing obsession within the incumbent community.
Thanks. You talk about those small bets. To paraphrase another thinker, chance favors the prepared mind. Matt, how have the regulators responded in trying to oversee this? And then I mentioned that collaboration that had to be in place as you change the playbook, and all of a sudden, functions that were regulated or monitored for compliance in a centralized way are now sitting in people's houses.
Yeah, and I think Sunayna made a really good point, which I hope we can talk about maybe a little later on, which is the importance of preparedness, right? And I think if you look at kind of our digital infrastructure as a country, for example, I think you can see that we were not that well prepared to administer some of the important programs. And so I hope that's an important lesson we take away from this. But with regard to kind of DFS specifically, one of the things we decided to do very early on was to require our institutions to submit to us pandemic preparedness plans. And it may seem like sort of an obvious thing to do, but I think that, in the moment of a crisis, you're sort of asking, like, do I want the companies to just, focus on keeping the ship afloat, or do I want them to kind of, send us information? And I think it actually ended up being the right move, given that this has become a very protracted situation. And I think that was a really important step to take to require those sort of preparedness plans very early on in the pandemic. And that's been a real, I think, it provided an incentive or an impetus to companies to get ready if they weren't already. I think we've also seen just, dramatically increased engagement with industry. I mean, we're just on the phone, sort of all day, just keeping in touch, and it's a very close line of communication. So that's been important. We've also had the transition to remote work like everyone else, and we've continued to do exams in a remote manner. And I think that the transition has actually been much better than I would have thought. I mean, I'm basically just on MS Teams calls all day, like too much, right? So it's like, no, like too much FaceTime, like let's just do a normal phone call once in a while, right? So I can eat some lunch while I'm chatting. So I think that, that's been very important. I will say though, however, that I think that for regulators, I think this is true for regulators generally. It's also exposed, some of the challenges with existing regulatory reporting and the need for much more real-time reporting. If you're getting data quarterly or annually, and there's like a 60 to 90 day lag on that reporting, it doesn't help you a whole lot, when you're in the middle of a crisis. So I think that's certainly an area that's important for us, and I think that we'll see more action from regulators generally in the area of digital regulatory reporting going forward.
Sounds like an opportunity for some RegTech players to get involved over there.
Yeah.
Let's go back to the payments issues that Chris started to raise, and we certainly heard about that in the last panel as well, from stores that won't accept cash to the increase in contactless terminals and even Bitcoin accounts and heightened interest in central bank digital currencies. COVID has certainly accelerated the trend towards digital payments and new payment instruments. As more of life goes online and remote, how are the networks and payment instruments keeping up? Is this the end of virus-laden, filthy lucre, or just an in-between point where people are adjusting for the circumstances, but cash will be king and return again? Are CBCs, central bank digital currencies, actually going to happen, or has the market actually moved past them? Shailee, want to give us your perspective, and then Chris, if you could chime in as well.
Yeah, sure. I'd love to hear Chris's views on this, but it's funny because on one end, I see governments like China moving forward very quickly with central bank digital currencies, and they all have their specific use cases that they're focused on, right? Whether it's financial inclusion, whether it's the decline of cash in those societies like Sweden. They're different countries kind of using it or experimenting with it for some reason or another. And the conversation is around retail versus wholesale. Does the central bank hold the accounts? Does it continue to have the accounts with banks and have a two-tiered kind of model like we have today in our existing banking system? And then what's the balance between privacy and transparency? I think that's uber important, especially in the United States. digital identity is a key part of that discussion. So I would say, I don't think their adoption is going to happen very quickly because there are so many components to figure out. Monetary policy and the future of the U.S. dominant global economy is a part of that discussion. So it is an evolving and multifaceted discussion. Standards are a big part of that as well. And so you have that happening on one end with governments and big multilaterals. And then you have DeFi happening and stable coins happening on another spectrum. And you've got 4 billion locked in ETH and ETH-based tokens. And I talked to decentralized finance startups in this space who are actually well capitalized. The VCs are actually investing heavily in this space. And they're like, I think CBDCs are going to come too late, right? So they're like, keep up with us. We're moving so quickly. So how do governments keep at pace with the innovation that's happening in fintech more broadly and so that they can, you have this balance of consumer protection and resilience of the systems, but then, if you're constantly planning and planning and planning, by the time you've created your plan, the private sector has already moved forward 10 steps. So I don't have a good answer for you here, just that we will see what happens. I think it'll be a hybrid model going forward where private sector has a big role to play. And my one thought is, could you imagine if the Postal Service was in charge of our email today? So I just want to take it back to email, right? And do we want that for our dollar? I don't know. Let's think about it. So Chris, what do you think?
Well, Sunayna, quotes Ernest Hemingway, whereas I myself prefer the postmodern philosopher of Nas, who says, by the time you can afford it, you don't want it anymore, which is basically the question that you're raising as about the time it takes to create a CBDC. I think really when you think about cash, right? So, I'll move sort of, to this question of CBDCs, but it really is kind of interesting because the question of cash is no longer just a question about sort of the paper products, that paper financial technology that people sort of associate with dollar bills. Sorry, I'm just in that zone today. But it's also, like the coins. We're in this very interesting question about, coins and nickels and pennies and the like sort of disappearing. And whereas these two, function at least from an economic standpoint, like a kind of like cash, right? It's supposed to be a financial technology that allows and permits anonymously and immediate settlement for financial transactions. But the problem is with cash is that it's defined by very specific limitations on space and time, namely that you have to be at the same place at the same time in order for that immediate settlement to take place. Now, coins, even before we get to the paper stuff, it's just very fascinating because I was thinking about it and, I tweeted out once that, when you think about a penny being created, I think in 1857, and a penny now is worth 30 times less what it was worth when it was first introduced, which would mean that that a quarter today is worth less than a penny was when a penny was first introduced. You have to ask very real questions about getting to this idea or concept of money as being both an instrument of payment, or a medium of exchange, whether or not it is an instrument for savings and a unit of account. Well, okay, so you definitely have this unit of account function, but am I really going to carry all these pennies? Or nickels, or arguably even quarters now. I mean, given if we're going to look historically at the value of coins, how effective is that particular financial technology? As even a medium of exchange. Much less questions as to sort of the store of value if where they're actually being stored is under the pillows in your couch. when you move then into this kind of question of the efficiency of small specie coins to then paper currency, well, that presents this other kinds of questions. Again, the basic limitations of cash, the space and time limitations of cash that financial technology can at least theoretically overcome. So then you move to the question of CBDCs, and prior to COVID, the conversation about cash was really, okay, if you transition to a digital-based infrastructure, what are the repercussions for the poor? For those who don't have the hardware or the software necessary to participate in a digital economy. It's a question of financial inclusion. Now, this particular conversation was really very much sort of out of line, or at least it was a stark contrast, as Shailee mentioned, to the conversation about financial inclusion and digital products everywhere else in the world, right? So in the United States, the conversation was, well, if we transition to this stuff, what about poor people who don't have phones? Whereas in the rest of the world, the conversation was, we really need to transition to this because people have phones, and people have phones, and they have other kinds of smartphones and other kinds of technology, where they may not necessarily have a bank account, right? And so the conversation on financial inclusion prior to the COVID crisis, right, in the United States was almost diametrically sort of the opposite of the conversation and the relationship that people sort of assumed that a digital economy would have for financial inclusion in the rest of the world, where you're trying to sort of draw people into a digital infrastructure in order to increase their access to capital and to financial services. Now, after the COVID crisis, what I think is happening is that the risk reward, that the trade-offs associated with cash are changing considerably, right? Where the trade-off is no longer just a question of, do people have phones, and whether or not, if you switch to a digital economy, whether or not people may get left out. But now you have this new trade-off, which is, well, if I continue to rely on cash, is this going to have certain kinds of public health consequences that will end up having a negative effect on especially the poor and the most vulnerable, right? So in other words, if we're actually using cash, right? Like if the plan is, to use your post office question, if the plan for financial inclusion is to make sure that there is a post office with an ATM in every poor community, is that really the best, most high quality financial product? And from a public health standpoint, what is it like to have people queuing in very close quarters, and then touching, the common surface of a dial board for an ATM, right? And all this stuff is making people ask, well, what then is the appropriate approach? And the way in which we look at financial inclusion, it doesn't have to be something more than just the product, but instead should the focus be more on the ecosystem? In other words, should the public question, the question of public policy, be more about, making sure that everybody also has access to 4G or 5G or some kind of smart device capable of onboarding them and integrating them into a digital economy, especially given the very real challenges that COVID poses to society. And I think that that's when the CBDC question comes in, and we can get to, what Nas would say about CBDCs, but I think that it's important, to first contextualize that entire question, right, against this backdrop of, well, how do we view cash, right? Because it's only once you have that question, and then you answer certain kinds of real technological questions, that then you can start to engage in some kind of public policy analysis.
Wow, thanks, Chris. Certainly in the markets in which IFC operates, this question of inclusive finance is critical, and mobile money has helped us make huge strides in there, but there's still a set of potential users who don't have that access. So this is a concern not just in the U.S. but far more broadly. And while we talk about inclusivity, I want to switch gears a little bit to some of the government support programs that have been part of the COVID response. Fintech has played a role in delivering government support. Has that worked well? Is this a one-off, or are governments going to broaden their use of fintech for aid programs on a continuing basis? And have those government responses really been effective and inclusive? Matt, if you could kick us off a little bit from your perspective, and then maybe back to Chris and some of the others.
Yeah, sure. Thanks, Matt. I think that I think fintech has certainly played a role, and I think that I applaud the companies for kind of moving quickly, and I think that they tried to get on top of this. I think the experience has been a bit mixed. I mean, not necessarily because of the fintechs themselves, but I think it's revealed, at least to me, that a fintech is not a substitute for government digital infrastructure, right? I mean, you still need to have some infrastructure in place. You still need to be able to identify, the people in your country, and I think that again, it highlights sort of the need for greater preparedness. So I think if you look, for example, at the PPP program, which I think was incredibly important, you had fintechs obviously jumping in quickly to support, but kind of the infrastructure was not really in place immediately to enable them to do so. And then I think that, even once it was, I think that you've seen with, at least on the lending side, and I think this came up on the previous panel, some of the weaknesses with some of the fintech business models, right? And so, if you're a lender and your source of funding is from, the secondary markets, or the capital markets, and the funding dries up, then you're in a difficult, it's difficult, as opposed to if you're a bank and you have access to stable deposits. I think what would have been great to see would have been, more fintech bank partnerships emerge, but of course it's hard to do that in like a week or, whatever, and especially with smaller community banks and local institutions. But I absolutely think going forward, there is an important role for fintech to play, but, those relationships have to be, you just can't turn those relationships on with the flick of a switch, right? I mean, they have to be sort of in place. And I think that, again, we need, I think this should be a wake-up call, at least for us in the US, that at a national level, we really do need to improve our digital infrastructure around how we do payments and how we identify people and how we work with distribution partners like fintechs.
Can I just make a comment to that?
Please.
So I agree completely. And, you saw that 1 million stimulus checks were sent to dead people. So, could we do something around digital identity within the system? It's funny because Matt and I worked in India on looking at government to person payments leveraging Aadhaar, and they have done something right with that. And we could do something here in the US that learns from those lessons in India, actually. But the, something around what I want to go back to what Chris said about ecosystems and creating more inclusive ecosystems. I think one thing with not just with COVID, but the whole Black Lives Matter movement and racial injustice kind of put at the forefront of a lot of conversations in fintech. We need to continue to create not just more access to capital and not just payments, but assets and ownership of assets. But we need those voices at the table and creating these ecosystems. So developing the algorithms, developing the smart contracts. And we are trying to reach out to those within the Ethereum community as much as possible. But I think all of fintech needs to be thinking about ways to increase usage, ownership, adoption of different types of assets, digital assets, right? And so something that we've been looking at a little bit more is fractional ownership of real estate through blockchain, that could really play a role in inclusion in the future. And how do the regulations fit into that, right? So we do need to start thinking about financial inclusion and how new technology and new ways of thinking about assets, what kind of regulatory oversight will we need to make a more inclusive system?
Yeah, and I'll jump in on that. I know it's but I think that's right. I've written a lot on been thinking a lot about that. And, when you think about fintech and its sort of original aspirations, which is, how do we effectively be more inclusive? I mean, how do you create certain kinds of gateways and channels for everyone to participate? How do we create a more democratized financial system? How do we create much more innovative channels for everyone to sort of participate in whatever kinds of, whether or not it be an investment or whether or not be the sort of financial economy writ large? How do we do that in a way that breaks down legacy oligopolies? That was sort of the idea behind a lot of the fintech innovations. And COVID, when you look at the responses and both in terms of the failures of the legacy infrastructure, and approaches, where certain kinds of large financial institutions were serving their own customers first, and those were the ones who typically had the larger bank deposits, right? Which meant that they were more likely to be corporate customers and those who are better off and the like. And then you're asking yourself, well, is there a better payment rail, a better way for people to participate? But part of that is also, even when you're talking about small businesses and, the fact that small businesses, is where you tend to find more African Americans, it's where you find more women. How do you make those, there's been a greater emphasis and awareness that the payment rails themselves have a direct relationship or repercussions for financial success and economic success and wealth building. And the fintech community itself, has to ask itself a lot of questions. This is a great panel. It's a diverse panel that kind of reflects in many ways the very different kind of demographics of the United States. The fintech industry is not this way, and it's going to have some real problems as the sector matures, and even technology eventually matures to the extent to which it allows new entrants, and it's going to have some problems where, I'd say fintech has this fundamental paradox: is it has to scale while also creating customizable solutions. It has to do that at the same time, right? And the only way in which you can do that is if you have like a diverse group of people who can create and think about the data fields that you're going to be using for your little robots, and to be able to interpret the data that you're getting and the like. And when you look at the absence of the few numbers of women, and the almost sort of absence entirely of African Americans and Latinos, that's a problem for this industry that's based upon access. And the regulators, as well. And we're going to have a big conference about this over at Brookings in 2 weeks. Also have to think about that as well, because it's hard to design an ecosystem regulatorily, and it's hard to design a financial product from a market participant perspective if the people who are being directly impacted by those rules and by those products, to cite Hamilton, aren't in the room when it happens. And I think that that's a very important sort of dialogue that's going on from both the regulatory and also market perspective.
So much to unpack there. How do we actually create a more inclusive delivery? How do we overcome that limited access of, the banks serving the people who were their clients, who were the ones who were already their clients, which means that the ones who weren't already their clients were shut out yet again. How do we address all of that, and how does fintech become part of the solution when you have the gender imbalances and the ethnic representations and racial representation issues, and if those people are not there and part of the discussion to create those tailored solutions, how are they going to get created? Sunayna?
Yeah, I think maybe I'll share my observations as somebody who's kind of collaborated and has been an investor, in the fintech community. A couple observations to kind of build on the points that have been made is, I think when you kind of look at the diversity, and fintech, is not one monolithic. We kind of throw them all in. It covers a diversity, like it's a spectrum, right? But I think there is a common denominator that, Chris alluded to, that there is this inherent ethos that, we're doing this because we want to break down barriers and reduce the opacity and the complexity that pre-exists in, financial services, and really, empower everyday consumers to kind of take charge of their financial futures, right? So I think that's a common thread you definitely see amongst, a lot of the prudent fintechs. As with any community, there, are always a few charlatans, but we're going to leave those out. So I think, in kind of looking at that, some of my observations during this period have been, one, the role and impact of fintech is absolutely evolving and going to evolve even more, and we briefly touched on it. And I think major props to, again, that monolithic fintech community for stepping up. And, now to quote, Rahm Emanuel, who said, never let a crisis go to waste. And I think the fintech community demonstrated that there was a crisis. They stepped up, they showed up, and in some ways they did better than traditional incumbents, right? And I think credit where credit is due. However, I think the bar is going to be raised. And what I mean by that is, over the last decade, working with a lot of incumbents who are partnering with fintechs or investing in fintech, the worldview was, fintechs are important because they help us, increase our efficiency, or it was very much about usability and front-end access. And what COVID has taught us is resiliency has got to be part of that conversation, right? It can't just be about, shiny front-end and efficiency plays. It also has to be about, resiliency. And I think that kind of goes into point number two, which is, whether you are an incumbent or a fintech, regardless of the stage, if you're operating within financial services at its base layer, we're in the trust business, right? And I think what, again, this crisis has underscored is if client safety, security, and soundness is not in the DNA of your organization and, in fact, in your product and offering, you're going to get yourselves into trouble very quickly. And unfortunately, you're going to harm your clients. So I think that additional prudence, which can sometimes seem painful, is actually very much a necessity. And I think that's been underscored for a lot of players, regardless of size. And the last thing I'll share is, there is sometimes a false debate between this incumbent versus fintech. And what I have learned over the years, and I think what COVID again has underscored, is it's really a debate about scale versus speed, right? Again, it's there that adage about, can an incumbent with scale overcome its inertia and innovate faster than a startup that has speed can build up its scale distribution? And, my mental model has always been, why make it a scale versus speed debate when you can make it a scale and speed collaboration? And that, frankly, was kind of the thesis behind why we've co-created with several fintechs and invested in several fintechs, which kind of rounds out the point that you got to be doing this on an ongoing basis, because when S hits the fan, that's not the time to start building a relationship with fintech. That's the time to start activating and scaling what you've been doing. So I think kind of maybe changing that mental model of fintech versus incumbent and bringing it together, because that then helps with access and reaching communities that otherwise, haven't been reached to, et cetera, that the panelists have, well articulated.
Thanks, Sunayna. And we're getting notice that we've just got a very short time to go. I think you've made an important point there about the trust business, and that links back into what we said. How do we expect a new set of consumers to trust if they're not represented? And so an important piece there to think about. I had one final question for everybody, but let's try to keep it to real brief, quick insight. We're seeing all of this acceleration and digitization of all sorts of activities, including finance. As a broad picture of COVID response, how is fintech business models or consumer preferences changing in response to the pandemic? And how might that then shift the direction in which finance goes digital? So some quick insights. Let's go around the panel.
Well, I'll just start off by saying I think that the most important thing is that people are by necessity becoming more, if not comfortable, at least inclined to go digital, even from the standpoint of customers. Sometimes there's a little bit of a switching cost in terms of your time or learning, how a different platform operates, but people are more willing to invest in that precisely because of the public health issue.
Great. Shailee?
You're seeing kind of what Sunayna said, this merging of the minds when it comes to the incumbents and the emerging tech companies, and sort of a blurring of the lines of who does e-commerce versus payments versus, banking, and those models are going to shift. I think now's you're starting to see that happen, and how will regulatory play into that? You're also seeing more people spend time online, especially youth, where I learned the term metaverse in the gaming industry. So how are we going to work with youth that are in this new digital age that everything is digital first? They're digital natives, right? Everything is online for them. It's a completely different perspective.
Thanks. Matt, that question about how does regulation respond, or where do you see this going?
Yeah, I mean, I would say, well, I mean, yeah, I think that it will be, that this will be a profound and important milestone if we look back 20 years from now. I think as I said, in the regulatory space, I think you will see a shift toward, more real-time reporting, and I think that will be good. I think that on the consumer behavior side, unfortunately, this has been a protracted situation, and there's no reason it should have been. I mean, there's no excuse that we should be where we are now. But I think that one of the implications of that is because it has been so protracted, I do think you could see consumer behavior actually changing over the long run, and not just over the short term with regard to people's comfort in using digital products. And then the other thing I'd say on the business model side, I hope that coming out of this, there is more of a focus on building sustainable business models that not only survive when times are good, but also can survive during times of difficulty.
Thanks. And Sunayna, want to wrap us up?
Yeah, for sure. I think, when you're in a crisis, you can either have the mental model of, hey, I just want to survive through it, or you can maybe take more of an aspirational thinking of, we want to use this as a catalyst to thrive and do better. And there's a lot of signals that, there's opportunity to do that, regardless of whether you're an incumbent or a fintech startup. And I think that's an important mindset. As was mentioned, I think COVID has initiated and ossified new consumer behaviors that are not going to turn back. So I think, the question of whether we overcome our inertia and leapfrog is no longer debatable. I think fintech has definitely proven its value, but I think now the bigger question will be that spotlight on, can we all do better in terms of inclusion and resiliency? So I feel very bullish about the partnership between incumbents and fintech and kind of driving those new goals forward.
Wow, thanks. That's probably one of the most optimistic things I've heard about the pandemic for a while. Bullishness, the leapfrog is definitely in there, and how can we do better on resilience and inclusion? And that's a great way to wrap things up. Thanks to all the panelists and to the Leon and Michael and the Columbia team for making this possible.
Thank you.
Cheers. Thanks.
Yeah, thank you, everybody. Great job, Matt. Your panel certainly shown how many innovation green shoots are there. Emerging out of this pandemic is very encouraging, and I want to echo the point about of these green shoots and these innovations should be sustainable. That's certainly key.